Welcome back to the Flex Pregame channel. If you're new to this channel is all about bringing free game to you, whether you're a working professional or entrepreneur, or someone that really just wants to get their money to work for them, right? You may be in a market, you may be, trying things on your own. We've been there, done that, but we wanted to create a channel where we can just give out some free games, some things that are working for us, working for our clients, and things that you can implement pretty quickly, pretty easily in your brokerage account that can help you with having some success. So before we jump in today, if you haven't already, go ahead and smash that like button. Go ahead and subscribe. And also, if you want to know about new content coming out, hit that notification bell, and we'll make sure to keep bringing new content for you. So let's go ahead and jump right in. All right, so today we have a great video for you. Today I'm going to be diving into some trades that I think you can do, you can implement pretty quickly here within the market. One of the trades that I really love is called covered calls, something that we're very big on in our program. But not only did I want to go over and cover calls and kind of give you some tips here, but I also wanted to give you a couple of stocks that you could, use these covered calls on to really help you with kind of driving some income in your account. If you've been paying attention to the market lately, you know things are kind of topsy-turvy. We were on a pretty steep decline there for a minute. Trump came out with the tariff information, kind of let us know that he was going to be, implementing tariffs on a few countries. He had the whole chart and everything, went down the list. And soon after that, we saw the market fall. Then he came back and let us know that he wasn't happy with the Fed chair. That caused a little bit more uncertainty. We saw the market fall again. But he did ease his stance on a few of those things, and we've seen the market kind of run a little bit. So today I want to go over a couple of stocks that may, I think are still in a positive have a positive sentiment in the market. So they haven't quite fallen past some of those indicators that we look at. And I'll go through the actual stocks, what I'm seeing in the chart, and how we can implement some cover calls on these stocks and what you can do to get these going for you. So first stock I want to look at is Walmart, ticker symbol WMT. And first I want to look at the charts, right? So if you look at the chart here, this is a 3-month chart of Walmart. We can see over the past 3 months, it actually is down a little bit. And normally when we're doing cover calls or trading any stock, we want to see on the short term, the stock being in an upward trend. Now, if you look at the stock, we see it was moving upward. We had a little bit of a fall, pullback. I talked about those things a little bit earlier in terms of what's going on outside of the market. I don't believe that anything that, happened with this stock has to do with the actual company Walmart itself. I think those were all external. So I'm still looking at this, and we can see it had a quick bounce back. Now, if you want to know what these lines are, I have some of the moving averages here, and then we have our RSI down here, a relative strength index, which we can use as well. These are just some indicators that I like to look at when making decisions on companies and stocks that I want to make trades on. So here is our 50-day moving average in red. We have our 100-day moving average in orange, and we have our 200-day moving average in blue. And the 50-day I like to use as kind of a short term to see if the company or the stock is in favor. It's trading below this. I'm kind of thinking that it's moving out of favor or in the short term. And then if it's trading above this, then has this tendency to go higher. It's trading in favor. And then the 200-day moving average is kind of a more of a long-term trend. When it's below this, I don't like to touch it at all. That's kind of a signal that it's out of favor long term. And then when it's trading above this or coming back across it is a place where I like to kind of look at as an entry point if I feel the stock is doing well overall and it has all the other things that I look at in terms of fundamental strength, being a leader in its sector. And then down here, I have the relative strength index where we're going to be looking to see this above 50 in terms of wanting to trade it, but not above 70 where it's kind of overbought. And then anything below that 50 getting down to that, below 20 where it's oversold. Those are some things that maybe when it sits oversold, I'd be looking to maybe get on a bounce depending on all the other indicators. But really, I just want to see it above 50 when I'm going to enter a trade below that 70 overbought, so I don't I'm not looking for a quick turnaround. So those are some of the things that I look at. Now, if we look at this chart again, we see Walmart had a little bit of a pullback, actually got below that 200-day, but we're seeing it quickly bounce back, and now it's trading above the 50-day again. Again, normally with everything outside of, the actual market in terms of, just economic things going on, I normally wouldn't look to enter a trade like this because this chart, I'd want to see it in an upward movement overall. But again, everything that's kind of been going on outside of Walmart and the market overall, I'm kind of taking that into consideration. If we look at the 6-month chart, we can see that it actually is an upward trend overall. It was moving up, pulled back, like I said, and now it's on an upward move. We look at the 1 year, we see it very similar. It's on an upward overall move. And then in the long term, I also like to look at this as well. We see in the long term, it's definitely an upward trend. So short term, little bit of a downtrend. I think that's more, again, to external factors. Midterm, long term, and an upward trend. So those are the things I'm looking at in terms of the charts. I want to actually see all of them in an upward trend before I make a move. In normal, a normal situation in a market, I think it would be in an upward trend overall. The next thing I want to look at is the top line revenue. So we know in terms of the market and stock prices, that top line revenue is really going to drive that price. So looking at the top line revenue, we can see it's consistently moving upward. We have 572 up to 611, up to 648, up to 680, and this is in thousands, right? So this is going to be billions of dollars. So Walmart is definitely bringing in revenue on that top line. Is continuing to grow, is continuing to go in that right direction, and that's really what we want to see. We want to see that continue to grow and continue to move forward. So we know by looking at the chart, also looking at this top line, that this company is in an upward movement, upward trend, and with everything that's going on, a lot of companies you'll see are not trading above that 50-day still. They move well below. A lot of them trading below that 200-day moving average, which the external factors have kind of impacted them more than Walmart. So that's why I was looking at this company in stock to trade, because I feel like it's been able to kind of withstand what's going on in the market and continue to move forward with everything that's going on, and had a really quick bounce back. So I'd be looking at this as a trade, and actually am trading it. So in terms of doing a cover call, what we'll do is we'll go ahead and jump into the option chain here. And a cover call basically is when you own shares of a company, you can sell options against that company that gives someone else in the market the ability to take those shares from you at a certain date, at a certain price. And for giving them the ability to do that, you get a guaranteed premium, which is cash in hand right away. So you're saying, hey, I have these shares. You can buy them from me at a certain price at a certain date, and someone will pay you to keep and lock in that opportunity. And the reason they do that is because they lock in the price, right? So let's say right now Walmart is trading at $95.22. Now, in order to do a cover call, you do have to own at least 100 shares, because options contracts are basically a contract that is for 100 shares of that stock. So if you don't own 100 shares, you cannot sell a cover call. But if you do have multiples of 100, say 200, 300, 400, you can sell multiple calls. And as you continue to grow your account, grow the ability to purchase shares, you have the ability to sell more contracts. So just to give you, a little background. So you have 100 shares, and we'll be talking about 100 shares doing one contract today. But everything that I'm talking about, if you multiply that by 2, by 3, by 4, depending on how many contracts you're working with, you can, just basically get the same premiums multiplied out based on how many shares you have. So in our example today, let's say we bought 100 shares today at the price of $95.22. So that'd be $9,522 to buy 100 shares. And now you control 100 shares. And for controlling those 100 shares, now you have the ability to sell cover calls, which will, one, allow you to bring in some cash that you get immediately. And if the stock continues to move forward, you get to keep the premiums that we're going to be talking about today. And we can work in some capital gains if you're selling out of the money calls. So out of the money just means you're selling a call that is higher than the price you bought the shares for. So out of the money would be higher. At the money would be the same price. In the money would be lower. For our example today, we're going to be selling out of the money calls because we want to get the ability to see some growth as well. So let's say again, we bought the shares today for 95.22, and then we're going to go into the option chain, right? So if we're going to the option chain, we can see here, all these contracts that are in the light blue means they're in the money. When we get down here into the white, that means they're out of the money. It just means basically $95 is the strike price. That is lower than 95.22, so that's in the money. Everything else is lower than the stock price. Those are all in the money. 96 is the first contract that's higher than 95.22, so that's where we get that out of the money, right? So just for our example today, we're going to be selling this $96 strike at the end of the week. So let's say if we were going to look at May 2nd, so that's the end of this week, the actual bid is what we would be selling it for, and this is what we would get this is what we get in terms of the premium, right? So 0.82, we multiply that out times 100 because 82 cents per share. That means we would bring in $82 for 1 week. So one rule of thumb we like to go by when we're selling cover calls is we want to be able to generate 3 to 5% of our investment every single month, right? So every month I want to be able to take in at least 3 to 5% of what I paid for that contract. Now with Walmart, we said 100 shares would be 95.22. All right. So if we're looking at 95.22, and let's just say we want to multiply it by 0.03, that would be 3%. We want to be at the end of the month, we want to be able to generate at least $285.66 to generate that 3%, right? So anything above 285.66 is going to be above that 3% threshold, and we want to go ahead and be able to generate that, right? So in this example, if we were selling 1 week calls and we just at the end of the week before May 30th, we have 1, 2, 3, 4 additional times plus this, so we can actually sell that 5 times, right? So we could do every week, we just do one, sell a cover call. Now with the cover call, let's say if the stock price stays below $96, then at the end of the week, that contract's going to expire worthless, right? It didn't go above $96, so it's not going to execute. So the nice thing is we will keep that premium and we will keep the shares. We can go ahead and do it again, right? Now, if it does go above $96, we are going to deliver those shares at $96, and we're going to take not only the premium, which was 82 cents per share, but we're also going to get the difference, which was 78 cents times 100. So it would be an additional $78. So that would be for that 1 week. So in our example, let's say the shares do not go above $96. They stay relatively close. It just kind of trades flat. So we get to keep the shares and we get to keep the premium. So we're going to do this 5 weeks in a row. Now these options do change per every week. So implied volatility is going to play on these. There's some other factors as well, but just know it's not going to be a static number. But I'm just doing this as an example just to show you how it could work. So let's say 0.82. Again, we had 5 opportunities within the month. Today's the 28th. Go to the 30th. That's about a month. So let's say we had 82 times 5. That's going to give us $410. Again, if we want to see what percentage that is, all we have to do is divide that by the 95.22. And that would be over our 4%, right? We move the decimal over, that's 4.3%. So if we did the 1 week call, we're doing that every week, we're going to generate over 4%, $410, and we're going to keep that cash and continue to grow our account. Now, the nice thing about that is every time we take in a premium, that's cash that we have on hand. Now, depending on the market conditions, markets like this, you may want to just keep cash on hand and keep it for opportunities. But if you are doing this in a more of a stable market, that's cash you can use to generate additional funds to buy more shares. If you're holding long-term stocks, that's a great way to generate capital to buy your long-term holds when you have opportunities. So that's one thing we want to do with this capital. And again, you can continue to generate that week after week. Now, if you look at other contracts, let's say 2 weeks, that will go up to 136. We'd have the opportunity to do that a couple times. We can multiply that out. Or if you just want to do a 1 month call and you just want to go all the way out to the 30th, we can see here that out of the money, the bid is 335. So again, if we wanted to see if that's going to hit our 3%, 335 divided by, what was it, 95.22, that's 3.5%. So we can see this is more of a conservative trade with Walmart. Walmart does not have a lot of implied volatility. It's more of a steady mover. So it's not going to fluctuate. For me, as the premiums are going to be a little bit smaller. But you can see this is an easy way to generate 3 to 5% with just doing calls and owning shares. So that's one of the stocks I like. Now, another one that I like to cover, very similar in this time, is Uber, right? So if we look at Uber again at that 3-month chart, we can see it is actually up. So it is trending up, but you can see there's some volatility here, right? It had a little bit of a peak, had to pull back. Again, same news, a lot of external factors, tariff information, Trump going after the Fed chair, things kind of getting a little bit, I guess, uncertain in the market. And now we see a little bit of a bounce back. Again, he eased his stance on some of those things, and now the market is going up. So this stock, Uber, it does not pay a dividend like Walmart does. So it's going to be a little bit more volatile. Cash is going to go in and out a little bit more. Also, it's a little bit of a cheaper stock. So it's not as expensive, even though it's only about $20 less. At the peak, Walmart had crossed $100. Uber is a little bit less expensive than that. So we're going to see a little bit more volatility. You have more traders going in and out of it as well. So you will see a little bit more volatility when you are trading a stock like Uber, right? And I like trading stocks like this when they're solid. Again, all the fundamentals, which we'll take a look at the financials. I like to pair it with something like Walmart that does pay a dividend. That way you have a little bit more stability, a little bit less volatility in your overall account. So again, Uber is one that I like. Now, if we go ahead and we take a look at the financials, again, we see the top line revenue going from 17 billion to 31 to 37 to 43. So again, we talk about it all the time, that top line revenue is what's going to drive that stock price. And they continue to build on that, continue to move forward. And on another thing that's really helped the stock price is they've actually got into where they're actually generating income, right? So for the longest time, Uber was not actually generating income. They were actually operating below the margins, right? So they were spending more to build the company than they actually were bringing in. So they actually were ending with a negative. But as of 2023, they actually started generating income and actually starting to be in the positive. So that's big for the stock as well. And we continue to see that as the company is growing, right? So top line revenue looks good here. And then if we take a look at this option chain, very similar to what we were doing with Walmart, we're going to do the same thing, right? So we have to own 100 shares in order to go ahead and be able to sell calls. And again, if you're doing this and you want to, think about having multiple hundreds of shares, right? You have 1,000 shares, you have 2,000 shares. You can do this on a broader scale, but I just like to keep cover calls when I'm training on it, just to 100 increments, just so you can see what's going on. And again, if you have 200, 300 shares, you would just multiply by 2 or 3. So looking at the option chain, right? So 78.33 is where the stock is trading at. So let's say we bought 100 shares, that's $7,833. And again, we want to be able to generate that 3 to 5% by selling calls on this stock, right? So right out of the money, if we go ahead and look, it'll be at the $79 strike. The bid is 116, right? So again, by the end of the month, you have 1, 2, 3, 4, 5 opportunities to sell calls on this. So let's say we have 116 times 5. That's going to be 580. And if we divide that by our price, 78.33, that's going to bring us to over 7%. So again, this is a little bit higher volatile, a stock with a little bit more volatility. So that implied volatility is going to raise the premiums. But you can see we're generating over 7% on our money in the month. just by selling calls, right? And again, that's guaranteed money that's coming into your account, again, that you can use to either keep cash on the sideline and wait for opportunities, or if you do see opportunities, to buy shares of long-term holds that you have. Or, if you're just trading, you can use it as capital to trade, right? So it's great to fund your account. I'm very big on setting that direct deposit on your trading account and making sure that you're funding it yourself, because we need to use the money that we're making to build our wealth. But if you can also use money from the market, that's great, right? You can take money directly from the market and use that to build your account, fund your account, and use that to trade and things like that. So we have that 7%. Or again, if you just want to go out and look at the 30-day, this trading, the bid is going to be 365. So if we do the same thing, 365 divided by our 78.33, we're getting close to that 5%, 4.6%. All right. So these are a couple of stocks that I like. Again, to trade, both of them have shown some resilience with everything that's going on in the market. They're both trading above that 50-day. They both did have some pullbacks, but they quickly came back in their trading, above those moving averages that I like. We see the short term. Walmart had a short term, little bit of a pullback. They haven't quite retraced all the way, but mid and long term charts look great. Uber, short term, mid term, long term charts are all moving in the right direction. Top line revenue on each of them are moving forward, and they're both stable companies that I like during, with everything that's going on right now. So that's going to wrap it up for today. If you do have any questions, feel free to put those questions in the comments. Also, if you are interested in some coaching, some one-on-one coaching, someone to kind of walk you through, show you some things on top of cover calls, a lot of other things that we can do to help you with building your account, look down low in the description section. There's a link where you can book a call with us, go through our case study, take a look at everything that we have in terms of what we do, and we'd love to talk to you. So that'll wrap it up again for today. We'll see you on the next one. Have a good one.